What's good, people? All right, I'm back with another video, two videos in a day. So I'm just gonna make this quick video because I'm gonna take a trade, or at least I'm gonna place a limit. So let's uh, go to the 4 hour and explain. So this was the FOMC candle. So when FOMC came out, this is the candle, and you can see it was a big bullish move to the upside. It even broke structure. So now I said I wasn't going to trade until we break out of this range, but based on this formation, I'm going to take a long position, or at least I'm going to place a long limit position. Reason why is, let's go to the hourly time frame so you can see this. In my previous video, I explained that there was a sweep here, and then there was a break of structure to the upside, and then it came back. There was a daily data point here. It tapped that daily data point, and then it broke up again. Now, if you look here, what happened? The same thing happened that happened here. It swept the lows, and then it broke structure. Not only did it break this structure, it broke this structure. It really broke structure. And then after that, what it did a small pullback with this inside bar, and then now it's pushing higher. So I love these kind of setups. I love the setup. Let me see if I can draw. No, not that. I don't usually draw. Okay, I think brush would work, right? So I love the setups where there's like a low, right? It sweeps the low, and then it breaks structure, right? And then after breaking structure, what I love to see, the best ones, is that it pulls back, and then when it does it goes higher, right? So it leaves like some liquidity, right? And then afterward it comes deeper, preferably like finds a data point, then does a reversal, and then takes off. Those are the kind of positions I like, right? So once I see that this second part, it made a low, and then it broke that low, then immediately I'll just look for a great position here in order for the price to come back and then take it off. Now, price doesn't always come back. Sometimes it comes here and then it goes higher, and then it comes here and then goes higher, and then it comes. Sometimes it never comes back, right? So I don't really care. If it doesn't come back, I'll just remove the limit order. But for now, because it completed that second part, that second condition of pulling back, this inside buy for me is enough, right? It signals a pullback, and then now it has broke above that high. It's currently Asia session, so anything can happen. So that's the reason why I'm making this quick video, because I plan on taking the trade. Now the question is, where am I going to place my limit? So if I go back up to the daily, I really prefer using like high time frame data points because they hold the most weight. So as you can see clearly here, there was a fresh daily level that I could use here. So price could potentially take out that initial low and then come back here. But just to make sure, this was the previous data point as price tapped into it, and then that's what created the second bullish market structure shift on the 1 hour time frame. This one has already been tapped, as you can see clearly here, by this. So this pullback tapped this level and this level. So you want to use a fresh level, but I can see that there's a nice level here, which is slightly above. It's basically in the same position as this level. So this level is actually no, because it broke, and then okay, yeah, it's fresh because this is the candle that actually broke above it. This candle didn't break above it, right? So it's still resistance by the time this candle completed. But then this candle, even though there's a wick here, it doesn't matter because it was still acting as resistance. It's only after this candle closed did this resistance get flipped and turned into support, and after that price has not come back and tapped out. So this is a fresh level, and as you can see, it's just slightly above this level, right? So I'd rather use the level that's closest to price, right? It's basically the same. There's not much difference. Sorry about that, I just heard my dog going crazy. But anyway, yeah, so there's not much difference, so I'd like to use this. So let's go to the lower time frame and see if we can refine that level a bit more. So as I can see, I like this level here for the H4 time frame. I love these levels. So if you can, let me just switch it to the H4. Blue signifies the H4. So if you just switch it to the line chart, these kind of levels, right? The A's and V's. Let me just quickly. These A's and then V's, right? So that's like resistance, and this is support. These are the best kind of levels. Of course, there's a third type level, which is like if price goes up and then just a little something. So these are like what you call the open close levels, or you can also refer to them as hidden levels, or no, I don't know if they're considered hidden level, like they're called dominant levels if you're familiar with Malaysian SNR and whatnot. So basically, yeah, these kind of levels. See, these are clear support and resistance levels, right? Let me just change the color to that so you can see it clearly. You know, that's the V, right? This is the V, this is the A, right? This is the A, this is the A. But there are also hidden levels, right? Like here, That's a hidden level right there. So that is a valid level. So when you switch the chart, you can see as these dominant, they call it dominant levels, open close levels. Yeah, so those are the three types of levels, right? But the best ones, especially with with regards to price breaking out and then pulling back, it likes to pull back to these A's and V's. Those happen to be better magnets for price to pull back. Pullbacks usually to these levels at least. It might overshoot and then tap another level, but usually targeting these levels or using these levels as targets or entry levels are really good. So as you can see, let's go back to the daily. So in the daily, this was a V, right? Up down. So if you switch to the, you see that's clearly is a V. Because price is a little bit close, but it's clearly, you see, it's clearly a V. This is also, this is an A, this is a V, this is a V. This is one of those open close levels, those in between levels, which are also very valid, right? But actually, in fact, this is actually a V, because this is down and then there was a bullish candle. The only difference is the reason why it came out weird is because there was a gap. It gapped down and then it opened. So even though this closed above, this is the actual level. So it's kind of weird. But you know, once you use it all the time, you get you see it very quickly. You see it all the time. You see it everywhere. So it's not even you don't even like think about it. It's just right there. So like I said, let me just not get distracted. This is a nice level. Like that H4, V is a nice level that price could come back to. It could even like prevent price from coming to my daily level. But you know what? Like I told you, those daily levels, they just hold a lot more weight. And where was my? Yeah, I moved it here, but that's not the level I initially marked up. This is the level that I initially marked up. So let's put it back here. Yeah, that's the level that I'm looking at. Look, here's the thing. If there's a H4 level and there's a daily level right below it, I will always take the daily level, right? But if it was the other way around, let's say this was a daily level and there was a H4 level below it, I would not even consider the H4 level, because the daily level, the higher the time frame, will act as a bigger magnet, of price. So price will easily overshoot the H4 in order to reach the daily. But if there's a daily in front of the H4, so the daily is stronger, so the daily will likely hold price, prevent it from reaching the H4. I'm not saying it will never do that, but it's safer to use the daily. So basically, the higher the time frame, the more stronger the level, the safer it is to use that area or level or data point as your entry or exit, depending on what you're trying to do at that time. So because I have a daily right here below the H4, I'm not going to consider the H4. Now there are situations where I'll consider where I really want to enter the trade, or the confluences stack up. Like I can clearly see right now, if I take out the 50% of this candle, right, as you can see, the 50% is below the H4 and is right above the daily. So that also gives me further confluence. But let's say the 50% somehow landed somewhere around here. You see, like it landed right at the H4. So yeah, that would be a confluence that I can't ignore. And then I'll be like, okay, you know what? Maybe I'll put my entry there and make sure my stop is somewhere below there. But when you have a huge candle like this, it's really size matters, because your stop loss can end up being really huge. You see from there to here, that's a 300 pip stop loss, right? So you're trying to even though you don't want to be really stingy with the stop losses, like I hate being stingy. Like I don't like people who are really stingy with their stop losses, like, right? But it really matters, because a small, adjustment in your stop loss, refining your stop loss, refining your entry can significantly improve your RR ratio, which in the long run will also improve your trading results, because it will take care of a bunch of losses that you had in the future, and maybe some that will come had in the past, and then some that will come in the future, because you are guaranteed to lose, right? So yeah, I see all that. So I think I'll take this level, right, as my entry. Now there's another thing that I just saw right now. Not only is this the low, so this was the second low in that you see when I said that break out, pull back, break out, and then come find a level here, reversal, and then enter, right? So not only is this inside bar a low, this candle also is a low. So I like that for this reason, right? So basically, I can't even speak properly. I'm trying to like release this video. I don't want it to be very, very long, but anyway, I'm just gonna take my time, whatever. Yeah, there was a low, then there's high, right? Then there's a low, and then there's another high. So this is basically what's happening here, as you can see, on a lower time frame. When you're trading on the higher time frames, you have to have the skill of understanding what's going on a lower time frame by looking at the high time frame candles. You have to master your candlestick patterns and understand what it translates to on a lower time. So this is basically what's happening right now. It went up, it pulled back, it went up, it pulled back, and then I went up again. So it went up, pulled back, went up, pulled back, went up. So now we have two lows. Now, of course, not all lows are equal. You know, this, I would consider this as a better pullback than this. Why? Because this actually created an inside bar, whereas this is just a wick up and down. But still, if you go low in time frame, you'll still see that pullback, right? But this pullback is more significant than this. But it doesn't matter, they're all pullbacks. Every single candle is a range, and if you take out the low, that's what a fair value cap is. For those of you who don't even know what fair value, or the reasons why you're trading fair value caps, you think it's all because of some woo-ha. No. All it is really is like you are trading liquidity. What it is let's go. Yeah. Today I feel like, I don't know, it's like it's like 1:30 a.m. but usually this is when I get very, very energetic. So anyway, all you're trading when you're trading the fair value gap is, if in case you didn't know, what you're trading is, you're just trading the low. You're just trading liquidity, right? You're just trading a sweep of liquidity. That's exactly what you're trading. So let me draw it out for you. This candle, you think you're trading like some magical thing that's going on in here, like maybe some imbalance, blah blah blah. Yeah, that is kind of true. But what you actually, the reason why it reacts violently a lot of the times, especially if you get the direction right, is because you're taking out the low. There was a previous low. Well, that's all liquidity is, highs and lows, right? And then you come back, you take out that low, and then that's where liquidity is, because people put their stop losses beneath their low, and then you enter, and then it goes up. That's all you're doing when you're trading a fair value cap. There was a high, and then it pulled back to create a low, and then it pushed up and created another high. So what does that mean? On a lower time frame, maybe on the 15 minute, 5 minute, 1 minute, this is a significant low somewhere. A lot of people will use that to place their stops, to continue buying. So when price comes back and takes out that low, which is right here, that's what you call a fair value cap. All right, in case you didn't know. So anyway, I don't want to go into that. I fucking hate everywhere. Fucking the internet, the entire internet is fucking filled with fair value caps. FVG. Man, I used to follow ICT back in 2017, around 2017 when I started trading. Even before he became popular and released a 2022 like free mentorship. This is back when he only had his paid mentorship, so you could only find the leaked videos. Back then, we didn't even call them fair value cap. We called them liquidity voids. But now everybody like fair value cap, FVG. I fucking, like, as soon as I turn on a video and I hear somebody talking about FVG, I'm gonna close that shit, because this is all they fucking know. Fucking VG. Like, what the fuck? FVG. Even the so-called people who are like popular, FVG. Fucking annoying, you know. It's like that cult-like mentality. I love ICT, you know. I'll never say a bad thing about ICT, you know. But of course, it's cultish people who are, you know, really, really annoying. So yeah, let me not get in on a tangent. So yeah, this low also coincides with my. So you see, it's actually lower than the H4. So I can just delete that H4. I'm just gonna leave it here, honestly. I like this very, very much. So this is what I'm gonna do. I'm gonna place a limit somewhere. Well, first of all, let me try and find this data point for this, because it's driving me crazy. I think it's here, right? This is the low here, 77. Okay, so it has to be somewhere near, because it just happened today, right? Where is it? 77. Did I even place it? Oh, no. Yeah, I went back in time in order to place. I think it's here, right? Is it? Yeah, it's right here, 77. Don't mind me, this is just my OCD. I have this thing about, you know, data points and making sure it's aligned exactly where the level is, else I go crazy. Anyway, okay, so I can use that level. Let's place a long position somewhere right there, drag it all the way to the side. Now I don't even know, you know, the way price is pushing, it might not even come all the way down here, because that's a significant way, you know, after making all this FOMC like move, it coming back all the way here, it's, I don't know, it's unlikely. But because it's Asia, I don't want to wake up later on a few hours and then see it pulling back all the way. So I just want to place the order. So yeah, that's looking like 250 pips. You see, it's 200. It's actually it's 200 like 60 pips, 60 pips, 266 pips, whatever, 267 pips. So I'm just gonna equate it to 250. I won't go to 300 because I'm adding like 50 unnecessary, well, not 50, like 40, 30 something pips unnecessarily. So I'll just make it 250. If price comes all the way back up to here, even though I didn't put my stop loss below the low, but if price pulls back this deep, so I think I'm going to want to be out of the trade, because I do not expect price to come this deep. If I got the price, I mean, even coming here to my entry is like I'm pushing it, I'm really pushing it, you know. But because this candle and this whole price action is kind of elongated, I have to have a huge stop. So yeah, like I said, price coming back here to the entry itself is actually far-fetched. But if despite coming back here, it just keeps on going down, comes all the way down here, well, I don't even want to be in the trade. So that's why I'll just put my stop loss here, because I don't want to put a 300 pip stop loss, because that will significantly further ruin my RR. And yeah, I think that will be my entry. So usually what I do is when it comes to entries, I like to just round it up to the nearest 5. So you see it's like 4208.7. So I'll just make it 4208.9. You know, just nice round even numbers. Make this back to 250. I love playing with even numbers. It makes life just so much easier, better. Even entering the trades on my MT5, just so much better. Calculating the risk reward, everything is so much better. So yeah, that's what I'll put. So I'm just going to place my limit order here and see if we get tagged in by tomorrow or something. There's a high chance that it won't. It'll just pull back and then continue to. If it does that, then fine, cool. I'll just wait for it to exit the entire range, and then I'll look for another setup. But if I get lucky enough for it to pull back and then come take me in, I'd want to be in this trade. So I'm gonna enter with my full 1% risk like I usually do. And here's the thing: if price comes back here and gives me a nice 1 hour, 1 hour reversal, I might enter a scaled in position. So that reversal will give me a confirmation that yeah, it wants to go higher. So yeah, if I do that, I might enter another position, maybe at 0.5. So I'll stack another position there, and I'll base the risk on that 1 hour reversal structure. So it won't be as big as this. This is just so that I can go to sleep and feel comfortable without having to check my phone every 30 minutes or whenever I fucking wake up. But yeah, once I get another one, I might even get a significantly better position, because if I get a 1 hour reversal structure, I might just end up having to have a stop loss of just 100 pips or 150 pips. So maybe from the entry to the high, I'll probably already eke out a nice 1 to 5, 1 to 3 risk to reward ratio before I even maybe get halfway to the, profit target of this initial trade. But yeah, it's just making sure that I get in the trade. I haven't had a trade all week, and yeah, this is what I'm gonna do. I told y'all I wasn't gonna trade until we come out of this range, but yeah, that's why I just had to make this video, just to explain to you my rationale. And yeah, let's see what happens. So I'll just enter the trade, and yeah, we'll see what happens. So see you all tomorrow for an update. Peace out.